Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, so markets are ready for the marquee event today, and I wonder if that can shift direction when you think about the tech trade recently, Nvidia.
I mean, it potentially could. I mean, we are expecting around a 7% move either to the upside or downside when it comes to Nvidia. And I think the conference call is really going to drive the market. Where do they actually still see growth? Where are they seeing maybe some bottlenecks in this market as well? And do they still see CapEx spend from these mega cap names as well as others continuing to ramp to the upside? That is going to be a positive for this name. Now, we have seen mixed reactions post Nvidia earnings in the past as well, where implied volatility for Nvidia goes down, but also the stock also pulls back just a tad bit. That could also weigh on the S&P 500. But I think the market has been really obviously keen in on this earnings announcement, and it could be something that does move markets. But if you kind of look at the past, hasn't had that much of a reaction over the last 2 or 3 trading sessions. It does appear that there are other factors that actually do take place here. But it will be obviously very interesting to see. And I think the data center number is going to be key. The last quarter, they actually missed on their data center number here. The market really didn't get too concerned about it. It seems like it was more of a supply chain bottleneck type of issue here. But if we see the same thing this time around, and it's not because of the supply chain or trying to ramp up Blackwell, then I think that probably could cause a little bit more of a problem for Nvidia. But for now, once again, the market makers have been favored when it comes to Nvidia's earnings over the last 2 or 3 earnings announcements here, meaning that the stock actually moves within the market maker move and not outside of that.
KG, let me ask you this. How much does it matter in terms of the market movement with the equal weight basically ending little change yesterday, slightly lower? Does that say something about the shift in sentiment in the market since it strips out all of the, the heavyweights, really?
Yeah, I think it just shows that the market is getting a little bit more defensive. What we did see yesterday is the fact that the market did not sell everything. We did not sell the defensive sectors as well as the risk-on sectors. We did see a rotation, and that rotational trade actually can build a foundation for the S&P 500, at least for now. But I do believe, Diane, that over the next couple of days and or weeks, we do need to either consolidate a little bit more and break higher here, because we are starting to see a lot of sectors rolling over or potentially breaking down to the downside here, and that's not what you really want to see, especially leading into the holiday season. So I think right now you are still seeing that rotation until we get some brighter spots or maybe some news items around the tech trade itself that's going to be positive. I think the market's still going to be cautious right now. If you're looking at the credit default swaps for Oracle and some of these other names that are out there, they're still rising to an elevated level here, which is obviously bringing in equity volatility in the market. We also have some dynamics, mechanical dynamics that are taking place in the S&P 500 as well. We have VIX options expiring this morning, so that should actually take a little bit of volatility out of the market, and then we will have options expiration on this Friday. So right now it's rotational in nature. We did actually get fairly close. It was only about maybe 15 points away from the 20-week moving average for the S&P 500. And if you look over the past 8 months, 9 months or so, outside of the tariff pullback here, that has been a key area of support where we at least bounce off of the next week. Doesn't mean that we're going to make new all-time highs, but you can make the case that a retracement or a dead cat bounce at the least could be in the cards here over the next couple of trading sessions, just based on the technicals alone.
All right, let's talk about another headline that Wall Street paying attention to is the Fed chair, the next one. Looks like the list is smaller, and it's interesting to see you've still got one who would be considered an outsider on the list, Rick Rieder. So talk us through where things stand now.
Yeah, it does appear that we are getting closer and closer to this announcement, and there is some chatter that we will hear who the new nominee is going to be by the time Christmas rolls around here. So the short list right now that I'm seeing from the Wall Street Journal is Kevin Hassett, who is the Director of National Economic Council, and then Kevin Warsh. You are seeing Rick Rieder still in the running there. It will be interesting to see if he does get picked. If he is the nominee, that actually could move equity markets fairly aggressively higher, because obviously he's been very transparent. It seems like the market would be a little bit less chaotic, if you will, if you're looking at Fed policy moving forward. Obviously, he's still a little bit more balanced when it comes to rate cuts, judging by his recent commentary around the markets here. But Kevin Hassett seems like he's really kind of leading the way when you're looking at the prediction markets at this point in time. There's also reports that Scott Bessent was actually considered, but he actually declined the job and wants to stay in his current role, which I found very interesting as well. So we're getting closer and closer here. Let's see if an announcement does hit the tape over the next month and a half or so. And we'll see how the market actually does react to that. But I think the market really wants to see somebody that's going to be still balanced and not just really aggressively trying to cut rates just because that's the policy of the White House. They want to be able to see somebody that could be measured given the economic information that we're going to see over the next 6 months.
Yeah, and I think one of the things that people may be honing in on is President Trump's comment that we may go, this is a quote, the standard way, according to reports. It's nice to every once in a while go politically correct. So it'll be interesting to see who the final pick is. All right, let's talk a little bit about the price action. Constellation Energy shares moving higher. Talk us through the trigger here.
Yeah, we are seeing the shares moving higher in pre-market trading. The Trump administration actually did approve a $1 billion loan to restart 3 Mile Island Unit 1 sector here that was actually shut down in 2019. Now, this loan is going to provide the cash available or needed in order to kind of revamp 3 Mile Island in order for it to be up to the standards of the United States and in order for it to be able to produce power. We do know that there was a deal that was signed by Constellation Energy and Microsoft. This was announced about a year ago to be able to provide reliable power to Microsoft's data centers within that region here. So this is going to be another step forward. And you actually do see the expedited process where not only do you have the application, but you're also seeing the approval relatively quickly here when it comes to Constellation Energy. So this is actually another boon when you're looking at the utility sector as a whole. Now, the White House did make mention when it came to this particular approval that they are looking at the traditional nuclear sources as of right now, and they don't really want to spread out the dollars, especially when it comes to the loans, to a lot of new technology. Doesn't mean that some won't get under this umbrella, but they want to definitely be concentrated in the proven methods of generating power in the nuclear space. Constellation Energy, once again, has that exposure. They have that experience, and you are seeing the shares once again moving higher.
Okay, all right, let's talk about Lowe's. Those shares getting some action this morning off the back of its quarterly results. It looks better than Home Depot. What's your takeaway?
Yeah, well, Home Depot reported earnings yesterday. We did see Lowe's obviously getting hit to the downside here. So a very low bar coming into this earnings announcement. The company did report revenue at $20.81 billion. Street was looking for around that particular metric. Actually, they reported a little bit higher than that. And the adjusted earnings per share came in at $3.06 versus the Street's expectations of $2.97. So if you're looking at comparable sales on a year-over-year basis, that did increase by 0.4%. They did lower their guidance when it came to their profit guidance. Now, their new fiscal year EPS outlook here is around $12.25 if you're looking at the midpoint that they guided, a little bit at the lower end of the range what they provided previously here, but they are actually ramping up their revenue guidance moving forward as well. So they obviously make mention the same things that Home Depot is mentioning right now. The housing market's slowing, higher interest rates is kind of putting consumers on the sidelines, especially when it comes to financing some of the bigger, larger durable goods, if you will, and they did not see the impact of a hurricane season, if you will, which actually does kind of drive a lot of revenue for both of those names. But once again, very low bar, a little bit more optimistic when you're looking at some of the commentary than Home Depot, and that's why we are seeing the shares actually re-rate a little bit higher here.
Okay, all right. Let's talk about your levels for today. For the S&P 500, where are you looking to the upside and the downside?
Yeah, still a very wide range. To the upside, 67.05. To the downside, 65.50. 65.50 level, once again, has some structural area of support there. So if we do break down today, let's see if some buyers really do try to step in. Still making lower highs here, and unfortunately, still seeing a lack of liquidity in the market. So, you know, risk management is going to be key in this trading session here today. And obviously, we have Nvidia after the close, which will also provide a little bit of heightened volatility when you're looking at the options market.
All right, thank you, KG. That is Kevin Green, Senior Markets Correspondent.